Good evening again, everyone. Hope the first breakdown found you well. It's still downloading as I've done this. I've just had to open another tab at the top. Just show you here. Still got some time for that to download to get DXY out to you. Double checking to see which one will get to you fastest. Doing my best to get it to you as soon as possible. But here's a nice a pair that I'll be looking at. Now, as the DXY, once you're able to read that or watch that back, what you will see is the anticipation of a little bit of DXY weakness to come out of the charts before potentially some DXY strength from that higher time frame point of interest on the DXY that should be looking to create potentially the higher high from the higher low point of interest. Now, with that said, with a little bit more of DXY weakness would, of course, give light to AUD US dollar pushing slightly higher. The caveat to that is, at the moment, we have a conflict whereby we're looking at potential for AUD US dollar in the same breath as a result of making what could be described as a higher high. We've come back down into the point of interest that created that high, and now we could be in the realms of actually pushing slightly higher. Now, depending on how you look at that, because based on the weekly time frame, if I zoom out, here is that weekly order block, and actually we have failed to close above it, which is actually telling us a couple of things. We are looking at moving to the downside from this area, and it's down to us then to understand, well, is that move on the lower time frames just going to be a pullback for another extension, or could that move be slightly lower and going to take us towards the downside based on DXY strength and how strong that DXY is genuinely going to be? So we'll take a deep look into that, because I think AUD USD is a very nice, interesting pair that I feel money could be made from that quite easily. So we'll take a look at that now. So with that said, what you will see is one of the fundamentals that I've spoken about, taking a short position when we are in a higher time frame point of interest where price looks to be moving towards the upside out of. I'm unable to do that on 3 accounts. However, certainly on my personal account, I probably wouldn't mind taking a short if it would make sense. However, the best way for me to safeguard myself against that is allow price to move away from that higher time frame point of interest, i.e. allow price to move away from this weekly order block and then short back into it, protecting myself along the way. As we speak, or based on what we're looking at doing, or what I'm looking at doing, or based on my anticipation of where price is going to be, that should be the play. I would expect price to move slightly higher, which would then allow me the range to short back into this, with the anticipation that once we do get that DXY strength coming into the market, it would be unfortunate, because once price starts to print on the lower time frames below this order block, I then will not be able to take continuation sells based on higher time frame points of interest, because for the week, my anticipation still must be that this weekly candle is going to look to reject this weekly order block towards the upside. So it's tricky, but it's certainly a good pair to go over. So we'll have a look at that now. So higher time frame, weekly order block, both directions. We've come out of this weekly order block, we've moved towards the downside. It's what you'd expect to see. On the way down, moving out of that weekly order block, we've had order blocks left behind. So one here up at those highs, and of course the order block that we've just been speaking about down at these lows, where we've refined those areas down to, and we'll have a deep look at that now. So in terms of, let's talk about it. If we start to look at the first and foremost, this lower time frame, or this lowest order block on the weekly time frame, let's put it on all intervals so we can have a good look out of it. At the moment, refine that weekly order block down. You see here we're in the realms of this daily order block just here. So let's minimize that now and get rid of it so you can see what was going on. Refine that point of interest down. It's then down to us to understand, well, why does that make sense? We have indeed broken structure points to the left hand side, and then we're there to have a look to find out what order block caused that break of structure. And here we are. We're down at that weekly order block. We've had the rejection from it. And then, of course, price is moving away. Now, price is moving away, but where is price moving to? That daily order block towards, daily 50 MA towards the downside. And that daily 50 MA, we've kind of made it work with the daily order block as a result of this bearish engulfing candle that, of course, took out price action to the left hand side. So it's most certainly, in my opinion, a valid point of interest. Once we start then to refine this daily order block down by the daily 50 MA, we're in this round, bottom left hand chart, 4-hour time frame, where we have to have a look at higher time frame price action. So of course, on the way down, here's a low, lower high, lower low, that we can see created on the daily time frame. And as we can now see, after this low which was created, which is a tremendous leg extension in itself, we're expecting price to want to create that lower high for that lower low continuation. So it's quite unfortunate that in the move back up, we've now had an order block on the higher time frame left behind. That is the conflict. So hopefully, when price, of course, starts to push slightly higher, we will then have a room towards the downside, which you'll see in a moment that we most certainly do. However, like what we were discussing on the DXY, when that loads on the way back up for price action to create potentially that higher time frame, lower high before the lower low continuation. Of course, in the interim, we're going to have a trend on the lower time frame starting from that 4-hour. And you can see that beautifully. We're making higher highs, higher lows, higher highs and lows, higher highs confirmed, higher low in the market to potentially be retested. However, have a look at the performance of the EMA to then give us the understanding, is it likely for price to want to return back here to create that high, or could this just be a nice target where we could then expect a reaction from? Because price is up at the highs, my first anticipation is that price, of course, is going to retest those highs, and then I'd be looking to take a nice short back down to those lows, where I'm going to expect a potential hold up, potentially even a range or a little bit of reaction. Absolutely a hold up, because we are within that weekly. By the time we get back down to the lows, we're going to have a lot of contrast, i.e. higher time frame contrast, order block towards the highs, price action is making sense towards the lows as well. DXY also is going to be showing signs of strength, but it's going to be going against our illustrations based on smart money concepts. When that happens, more often than not, what we're going to see is a bit of a range. It's just a forecast. So with that said, I would still be interested in taking shorts because of the higher time frame, guiding me starting from the daily, why it makes sense, and also what we've spoken about on the DXY. When that loads, it will all make sense for you. But if we look at the daily time frame looks really, really nice in terms of the fact that, yes, I understand we've come into this area for a potential move towards the upside, but we have the daily 50 MA in and around that area, supported by that daily order block towards the downside. And what we can say is Wednesday, Thursday, and Friday, for whatever reason, we failed to break above that. So therefore, when market opens and we get to the charts in the morning, my anticipation is that price action is not going to want to break that. Of course, price can do whatever it wants to do, but until we get a daily candle close above that daily 50 MA, and more importantly, a daily candle closing above that daily order block, is going to be something that I'm going to continue to look to manipulate towards the downside, as long as I have the range back down to that weekly order block, so it's going to make sense for me. If I then sync that across all intervals, that weekly order block just here, top right hand corner on all intervals, we can see when we start to refine our nice points of interest down, particularly from the daily down into the 4-hour, we're in this area, meaning that, as you can see by my red arrow illustration, based on DXY strength, I have the range back down to that weekly order block, where until I reach that, I'm not in breach of any of, let's say, my investor capital. So I'm able to take that short position down. However, once price starts to get within that area, my shorts based on higher time frame points of interest are then null and void, because I cannot disregard this higher time frame point of interest to then take a short into that area based on higher time frame points of interest. It just doesn't make sense. But what I am able to do is absolutely trade 15-minute price action only if it makes sense. Potentially I'm going to have a nice Asia range within that area, so I'll get to my nice illustrations now. Let's say price opens down here. That's the Asia range. Let me draw that. So we wake up, prices come into that area. We're then having a nice Asia range like this. Price is printing beautifully. Let's move the Asia range across, and then of course we're going to have a nice 15-minute order block above, which is of course a break of structure potentially. And then once price comes back up to that area, the first thing I'll be saying is, well, I'm in my higher time frame point of interest where I understand price is looking to reject towards the upside. However, based on 15-minute and an Asia range concept, I then need to make a decision, does it make sense to then short while I'm within that higher time frame point of interest? And absolutely, I will be looking to do that, because I think it's a good risk worth taking based on all of the chart analysis. Of course, if I'm wrong, it's just a risk worth taking. It's the price of good business, I would say, based on AUD US dollar. So I like that trade. I like AUD US dollar at the moment. Hopefully, when price opens, it doesn't dump down. And by the time we get to the charts in the morning, price is just kind of hovering around this area. And we've got a nice bullish trend up into there where we can clearly identify higher highs and higher lows. Then what we'll be looking to do is price come into that 15-minute point of interest, identify the higher low that created the higher high that pushed price into that area, wait then for price to break that pullback, and then that would be a really nice looking short position based on DXY strength as well. And I'll be looking to take that back down into that higher time frame weekly order block, and then I'll be looking at my charts to understand where is the better place to look for an exit, which at the moment what I can see against me is this 4-hour 50 EMA. Why does that make sense? Well, what's the performance of the 4-hour 50 EMA doing? And as you can see, we've broken above, rejected, we've come back, we're rejecting it as well. So therefore, what would I be doing? Trying to hold a trade beyond that, or if not, what would I be doing? Not managing my trade by that area. I wouldn't mind holding beyond it, but most certainly I would have to be break even based on everything what the charts are telling me. So that's my thought process on AU in terms of short positions. Now, in terms of long positions, I think it's a little bit more technical, because to take a long position on AU would mean that we're going to have a long position on AU from down here. Yes, I'm expecting DXY weakness at some point, pretty much in the immediacy. However, to take a long position on AU would mean I need to have a look at the DXY. When AU gets down here, what's the DXY doing? Where could the DXY be in order for me to then anticipate enough DXY weakness to further come out of the market? But with that said, if I'm anticipating that much DXY strength, then why can I not have a pullback on the DXY for continued strength? And of course, once you are able to view the DXY video, it actually would probably make sense to actually expect, after this DXY strength, to expect a DXY pullback for continued strength of the DXY, which would just be higher highs, higher lows, higher high continuation. So I hope that breakdown also makes sense for you guys, team. I'll try and keep that short and snappy, and therefore we'll just have another check to see how this is getting on. 7 minutes left for that to upload. and that's still taking its beautiful time to download for you guys as well. But I'm definitely going to I'm pretty adamant that this will be done before I head out for dinner, as I look towards my missus behind me giving me the evils why trading is taking up so much of the time. But she's a trader as well, so she definitely understands that it's a requirement. So thanks for your patience, everyone. Take care and stay tuned for the next upload.